Welcome. My name's Arna, and today I want to show you how to use inventory grouping in QuickBooks. This allows you to have just a few group inventory items in QuickBooks and any number of inventory items in Active Club Manager. This really simplifies QuickBooks accounting, and we highly recommend using this technique. So let's go and have a look at what QuickBooks looks like. So QuickBooks consists, the heart of QuickBooks is a chart of accounts. And what we've done here is we've added a bank account. We've added an accounts receivable account, which we need for the credit memos, as QuickBooks calls them. We have a fixed asset account where we put some assets of $5,000 worth in there. Then we've added a couple of income accounts. And then further down, we have done an account for each one of the states that we're setting up and using. And of course, you can have as many of these as you like. And then our balance sheet is just got the $10,000 in the bank account, the asset with the $5,000, and then the P&L is completely empty. So let's get started. The first thing we need to do is set up a mirror of the QuickBooks chart of accounts in Active Club. So we want to have an exact mirror in Active Club. So let's do that. So in Active Club, the chart of accounts is set up under Setup here in Network Setup Account. Just bring up the window. So here is our account list. I'm going to right mouse and it brings up a menu, Import from QuickBooks. Currently we have no accounts set up in here. Now it opens up a window that allows you to pick sections of your chart of accounts to import. We're just going to grab the whole thing by leaving everything blank. And there we have it. We have our chart of accounts, which is an exact mirror of what's in QuickBooks. Here are the sales tax accounts and the income accounts. And further up here, we have the bank account, accounts receivable account, and so on. Here's the cost of goods account. When talking to QuickBooks, always open up your log, see what's happening. So you can see that we have imported 53 items that were inserted into Active Club. Just to show you the dynamic nature of this, I'm going to import the same chart of accounts a second time. I'll do a refresh just to make you a believer, and then we'll look at the log, and you can see I just updated 53 accounts. So it's smart. It knows how to synchronize the chart of accounts. So that's the chart of accounts. The next thing to look at is sales tax. So let's hop over to QuickBooks. And I'm going to open up the item list. Now, there are two ways that Active Club supports sales tax. One is actually using the QuickBooks sales tax system, which we do not recommend using. It is a transactional-based sales tax. In other words, there's one sales tax amount per transaction, whereas Active Club is an inventory or item-based sales tax system, and that allows you to have much more complicated environments. For example, mixing food wine, and non-taxable items, all in the same order. So the first thing I'm going to do, and we're going to be using the Active Club line item sales tax system for this presentation. So I have created a other charge item for each state that I want to collect taxes for. And so it's a type other charge, and then the convention to use is a two-letter state name. And then here you connect it to the account that is appropriate. In this case, California, any description is fine. So I do that for each one of my states. And then let's go over to Active Club and open up our sales tax rules. Now this column here is currently blank, which means there is no connectivity between Active Club and QuickBooks. So let's change that by right mouse, import sales tax structure from QuickBooks. And I'm going to refresh, and you can see the ones that have these IDs, they have been connected to QuickBooks. Our tasting rooms have not. I'll show you how to do that in a second. Now, if you want, you can create these other tax records in the item list in QuickBooks. You can add those later, import this again, and then these would then be connected to these other states that are currently blank. But for this show, we're just going to keep it simple. Now again, let's have a look at our log, see what happened. So it imported 9, no errors. All is well. Now, how do I do the tasting room? So I'm going to open up the tasting room. This one happens to be in California. So I'm going to use the same tax record in QuickBooks that the state shipping uses. So I'm going to copy the ID here, just the ID, nothing else. Click on tasting room, which is now blank, paste it in, and save. Let's do the same for Virginia. Copy the ID, click on Virginia, paste it in, save. I now have all the sales tax set up in Active Club. The next thing I wanted to talk about is where we don't use inventory grouping. I want to show you how that works so it's clear what the differences are between using grouping and using one-to-one inventory matching. So we can rid ourselves of that. We're finished, and we're open up our inventory window. And this is all the inventory we have in Active Club Manager. For this demonstration, I'm just going to pick a couple of items that we're going to transfer over to QuickBooks and perform a sale, and I can show you the P&L and the balance sheet, what happens, especially with cost of goods and assets. So I'm going to right-click, I'm going to select the two, and then export selected to QuickBooks Accounting. And again, we're going to look at the log, and the log says, no, you didn't do that right. You forgot to fill in an income account. Okay, so here I am actually in the view QuickBooks setup, so it's showing me these 3 accounts that I need to fill in. They're blank, so I'm going to open up the first one, and we'll set the income account to be the red wine. The cost of goods account, set that to cost of goods, and then with the asset account, we'll set to the wine stock. That's that one done. Do the other one. Again, this is also a red wine, so we'll set it to the red wine income account. we will set the cost of goods account, and we will set the asset account. Asset account is there, and save it. And we will then highlight both and then shove those over to QuickBooks and see what happens. Again, let's open my log and see what it says. It says all is well. Everything worked fine. So let's hop over to QuickBooks, and there they are. See those two items? Each one is a inventory part, as QuickBooks calls it. And this is the cost of goods account, the income account, the asset account, and it also transferred the cost of goods value and the sales value, sales price value. So we should now be ready to try this out. So I'm going to open up a transaction window, and then I'm going to go to my POS, and I'm going to buy those two items. Try to make this as brief as I can so you don't fall asleep. And here is the sale I just made on the POS. And there's the Pinot and the cab. And let's transfer them to QuickBooks. Here, synchronize with accounting. Okay, let's look at the log. See if there's anything here, and everything worked fine. Let's go over to QuickBooks. And here you can see, put my highlighter on, here is the bank account increase, the asset account decreased, the cost of goods on the P&L shows up, and the income shows up. And here's my tax liability because I bought that in the Virginia tasting room. I look at the detail of this, and here shows you the decrease in the COGS value of the asset account by the $9 and the $650 that we had assigned to those two inventory items. So that's how it works when you are using one-to-one matching. There is nothing extra to do because it just works. Now let's try inventory grouping. So the first thing I need to do is I'm going to give us a clean slate. I'm just going to wipe out everything that we put in here. And we're going to go back to our balance sheet of $10,000 and $5,000, and P&L is blank. So let's look at the inventory. Okay, I want to, first of all, I need to set up the groups. So these are the two groups that I've created in Active Club. I'm going to open those up to show you. So I've connected them, the red wine as a red wine group and a white wine group. And I've connected the red wine group to the income account, red wine, cost of goods account, and the asset account. And then the white wine, I've done the same thing, but to a different income account. Same cost of goods account, doesn't necessarily have to be, but in this case it is. And then the asset account. So now let's transfer those groups over to QuickBooks. And here you can see they are been transferred. I'm going to eliminate these one-to-one inventory items we had before. We don't need them. Let me look at these. So here is the name. Here is the cost of goods account, income account, and the wine stock account. Now, the really important thing is that the cost and the sales price, they are zero, because these are groups. They're not real products, and they're just funnels through to the chart of accounts. So going back to Active Club, I need to connect all my inventory to these groups. So this is my red wine product line. These are the ones that I'd set up earlier. We're now going to overwrite all of this and attach these to these groups. The way I do that is I select them all, and then I pick Update Inventory Accounting Data. And I'm going to select in here my red wine group first for these products, and then distribute that throughout. So now you can see all of these products are linked to the same inventory group item in QuickBooks. So definitely a one-to-many relationship for the red wine. Now let's have a look at the white wine. A lot less of that. Let's select them all, and then I'm going to do a Update Inventory Accounting Data, and pick the white wine group and update, and there you go. Now all the white wines are connected to the white wine group. Okay, so let's get a sale. Let's do a sale where I'm going to show you the accounting setup. Setup Network Accounting Interface. So this is a QuickBooks Accounting Interface setup window. And in this, the first transfer I'm going to do, I am not going to click the switch, which is the inventory COGS transfer, journal entries. So you bear with me just a minute. I'm going to buy a couple of things. Check out. And that's done. And there we have it. There's a transaction. And if I open it, you'll see that it has the same two inventory items, but this time they're linked to the group. So let's transfer that one sale over to QuickBooks. Over to QuickBooks. And now you can see that we have the bank account has increased. The asset account has not changed. Problem. Cost of goods account is 0, and the red wine income account has got the right value. The tax has got the right value. Let's look at the detail. And you can see the cost of goods transfers are zeros because they are using the group values of 0. So this is where it comes to play that we need to use journal entries. So I'm going to go back to Active Club, and I'm going to open up the Accounting Setup window. Network Setup, Accounting Interface Setup. And I'm just going to click on this one switch that says Inventory COGS Transfer by Journal. Okay. Now I'm going to transfer exactly the same transaction again. It's done. Go to QuickBooks. And you can see this time the asset account has reduced and the cost of goods account is also got a valid number in it. And let's have a look at the detail. How that was done. And you can see here are two journal entries for the $6.50 and the $9. So this also means that as the cost of goods value change, you're just changing them in Active Club. You do not need to mess with those in QuickBooks at all. So that's how that's done. I wanted to show you one thing, which is that you can actually update those journal entries if you make changes of some kind to the transaction and transfer again. For example, that the cost of goods value was incorrect. You can see now that it says modified. So it's showing you the transaction, the inventory of the product, the selection record in the transaction, and the date, and of course the values. So that is how this journal entry works with grouping. The next thing I wanted to show you is how this works with swap. On the POS, we have the facility to do swaps, and you can have both credit swaps and you can have debit swaps. So let me show you what this all means. But in order to make it really easy to see, I'm going to eliminate everything we had in the past here. Okay, and then look at my balance sheet and my P&L, and then there again, back to plain vanilla. And my inventory just has the two groups. Okay, we're going back to Active Club. Let us make a sale. I'm going to do this on the POS, and I'm going to buy 3 products, check out as fast as humanly possible, and it's done. And there you see it. Here's my sale. And there's 3 products I just bought. So let's transfer that over to QuickBooks. Right mouse, transfer. Go over to QuickBooks, and there we see the transfer for those 3 product sales. And have a look at the detail. See now there's 3 journal entries because we bought 3 products. And here you can see the cost of goods and the reduction in the asset account. Again, your bank account and your income account and the sales tax liability. Now, let's do a swap. So I'm going to go to the POS and I'm going to pick that order. And I'm going to do a swap. And I'm going to swap out the $24 bottle with a slightly cheaper one. I'm going to get a $22 bottle. check out. So I'm going to have a credit. So you can see it indicates that this one was swapped, and this one has a refund. So it is actually a credit note. And you can see I returned a $24 bottle and swapped it out for a $22 bottle. I was given $2 back plus the difference in the sales tax. So let's move that over to QuickBooks. And you can see here that the credit went into the accounts receivable account. And you can see again the asset account and the COGS account changed slightly, and the income account changed slightly. And of course the tax too. So that's a credit swap. Now let's do a debit swap. Oh, I forgot to show you this. This is how the actual journal entries work. So this is the Pinot, which is a $9 cost of goods. That was the decrease here, and then because it was swapped out, you'll see a increase here, and this is the one that we actually swapped the Pinot out with, is this one here. Now to show the debit swap, I want to start with a blank so it's really easy for you to see. Clear that out. Clear all these records out of here. A couple more to go. There you go. So now we should have a simple $10,000 in a blank P&L. So let's go back to Active Club and let's do a different kind of swap. So first of all, I'm going to buy the first same 3 products. And as fast as I can, check out, and there is the sale on the POS. And again, for those same 3 products. And let's transfer those across. Back to QuickBooks. And you'll see all the changes here. We have the asset account changed, bank account, the income account, and the cost of goods account, just like before. Now let's do a credit swap. So on the POS, I'm going to select that transaction, hit the swap button, and we're going to take out the $24 wine, but this time we're going to add in a more expensive wine. So I'm having to pay $13.44. And go back to Active Club, and there you have the swap. And this time it shows a sales order because I took money for it. Let's open it up. You see I returned a $24 bottle of wine, and I got a replacement with a $36 bottle of wine, and I have to pay $13.44. Let's transfer that over to QuickBooks. And you can see the change. You can see the cost of goods changed, income account changed, the bank account changed, and the asset account all changed. And let's have a look at the detail. Under here, and there you have it again, that this wine was the one that was swapped out. That's the Pinot. So it was a $9 cost there, and then that was returned there. And then this is the $32 wine that was $7.20. So that shows you how to use inventory grouping. I hope you found this useful. Please don't hesitate to call or contact us if you have any questions about this. Thanks for coming, and I look forward to seeing you the next time.